Welcome to the Deep Dive. Today, we're taking a look at Rigetti Computing, ticker RGTI.
Yeah, they just had their Q2 2025 earnings call.
Exactly. And this is one of those companies, right at the absolute edge of quantum computing. Always fascinating to track.
Definitely bleeding edge.
So we've waded through, well, a whole stack of reports, financials, analyst notes, the earnings transcript itself. Sources like Guru Focus, SimplyWalstonInvesting.com, Stock Analytics AI, you name it. And our goal here, as always, is to kind of cut through it all for you, give you the key takeaways, the money stuff, the tech breakthroughs, the long-term picture.
And hopefully some context, maybe a few surprising bits along the way.
Right. So, Rigetti's Q2,
Yeah.
what did it actually tell us about their path forward in this quantum race? Let's peel back the layers.
Sounds good.
Okay, so when those Q2 numbers first came out, the immediate reaction was, well, it looked like they missed Wall Street's forecast, didn't it?
Yeah, that was the headline take from a, let's say, traditional financial view.
What were those key figures? Revenue, loss?
Okay, so revenue landed at $1.8 million. The street was looking for maybe $1.87 to $1.91 million, so a slight miss there.
Okay.
But the bigger thing was the year-over-year drop. It was down, 41.6% from Q2 last year. That was $3.1 million then.
Oof. That's a pretty steep decline.
It is, and it kind of highlights, free listening, the challenge of making money consistently right now in quantum. Big contracts are still sort of lumpy.
And losses.
Yeah, they widened quite a bit. Net loss per share was $1.13. Analysts were hoping for maybe Jersey dollars of 4 to $1.06 loss per share.
So much wider than expected.
Much wider. That's an 86% worsening compared to the $1.07 loss they had in Q2 2024. And the total net loss for the quarter, it ballooned to $39.7 million.
Wow, nearly $40 million. Compared to what last year?
Compared to $12.4 million last year. So yeah, a 219% increase. Huge jump.
And what about margins and spending?
Margins took a big hit too. Gross margin dropped from 64% last year down to just 31% this quarter. Part of that was the mix of revenue and some lower margin contracts, like one with the UK's NQCC, the National Quantum Computing Center.
Right, I saw that mentioned.
And operating expenses also ticked up, about $20.4 million versus $18.1 million last year. Mostly things like salary increases, some new hires, more consulting fees, especially in R&D.
Okay, so those numbers. Revenue down, losses way up, margins squeezed. Sounds pretty rough.
On paper, yes.
But the market reaction wasn't exactly panic, was it? The stock dipped a bit after hours, maybe 1.5% to 5%.
Yeah, it was relatively muted considering the headline figures.
What do you make of that? How should we, or how should you, our listener, interpret a stock kind of shrugging off what looks like a bad earnings report?
That's a really key point. It strongly suggests investors are looking past the immediate P&L.
Right. They're weighing other things.
Exactly. In a sector like quantum, which is all about future potential and foundational tech, things like technological progress, strategic positioning, and crucially, financial runway can often outweigh a single quarter's earnings miss.
And this stock's been incredibly volatile anyway, right?
Oh, massively. Up over 1,700% in the past year, trading in a huge range. So it's definitely not your standard stable company, and investors are likely looking for different kinds of signals than just quarterly profits.
Okay, let's go back to that big net loss figure. Nearly $40 million. Sounds alarming. But you mentioned there's more to the story there.
Yes, absolutely. This is where you need to look a bit deeper than the headline number.
So break it down for us. What's really driving that figure?
Rigetti pointed this out in their report. A very large chunk of that $39.7 million loss, specifically $22.8 million, was actually from non-cash items.
Non-cash. Like what?
It relates to changes in the fair value of certain liabilities they have on their books, derivative warrants, and earnout liabilities. Accounting stuff, basically.
Okay, so if I'm getting this right, more than half of that big loss number wasn't actual cash spent running the business.
Exactly. 57% of it, to be precise. It's an accounting abatement on paper, not cash flowing out the door for day-to-day operations.
So how does that change how we should think about their actual performance, their, operational burn rate?
It changes the picture quite a lot. If you strip out those non-cash accounting items, the actual loss from operations for the quarter was $19.9 million.
Okay. Still a significant loss, obviously.
Yeah, nearly $20 million is still a substantial burn, no question. But it gives you a much, much clearer view of what the core quantum business is actually spending to operate. It's like, are you looking at the fuel the car burned, or are you including the drop in its resale value? Two different things.
That makes sense. So despite that operational burn and the revenue dip, you mentioned their balance sheet looks Surprisingly strong.
Surprisingly is an understatement. It looks incredibly strong.
How strong are we talking?
As of the end of June, Rigetti reported, get this, $571.6 million in cash, cash equivalents, and available for sale investment.
Like we're $500 million.
Yep. And maybe even more importantly, they made a point of stating they have absolutely no debt.
Wow. Okay, that is a fortress balance sheet.
It really is. It gives them a massive cushion.
So how on earth did they build up that kind of war chest, especially when revenue was falling?
That was the big strategic move in Q2. They completed a huge equity raise, $350 million, using what's called an at-the-market or ATM offering.
Right, the ATM. Can you just quickly explain what that means for listeners?
Sure. An ATM offering basically lets a company sell new shares of its stock directly into the market over a period of time, usually at prevailing market prices. It's flexible, but
Nice catch.
there's always a catch. The catch is dilution. Issuing all those new shares means the existing pie gets cut into smaller slices for current shareholders.
And was the dilution significant here?
Oh, very. The number of weighted average diluted shares outstanding basically exploded. It went from around 172 million in Q2 last year to almost 300 million, 298.3 million this Q2.
Whoa, that's a huge increase, like 73.5%.
That's the math. Yeah. So definitely painful for anyone holding shares before the raise.
So a tough pill to swallow. Why do it? What does that capital actually buy them strategically?
It buys them time and runway. A multi-year runway, according to them.
Time to do what?
Time to fund that really intensive R&D, hit critical technology milestones, and scale up without constantly worrying about where the next dollar is coming from.
I see.
The CEO, Subodh Kulkarni, said the money is mainly for working capital, building out infrastructure, capital expenditures, and just general corporate needs. But he also mentioned it gives them flexibility for potential partnerships, maybe even acquisitions down the road.
So for you, the listener, it signals management is playing the long game here.
Absolutely. They're prioritizing long-term survival and trying to win the tech race, even if it means short-term pain like dilution. They basically traded shares for time and resources.
Okay, that makes sense. It wasn't just about shoring up the finances, it was about fueling the technology. And on that front, they did have some big news this quarter, didn't they?
They did. This is really the heart of the Rigetti story, the tech progress.
What was the main announcement?
The big one was the general availability and deployment of their new quantum computer, the Cepheus 136Q.
Cepheus 136Q. Okay. What's special about it?
They're calling it the industry's largest multi-chip quantum computer. It's built using 4 separate chiplets joined together.
4 chiplets, is that a lot?
It's the most chiplets anyone has apparently put into a single quantum computer so far. So, yeah, it's a significant step in that modular approach.
And what about performance? Did they just build something bigger, or is it better too?
Definitely better. This is maybe the most impressive part. The Cepheus 1 achieved a 99.5% median 2-qubit gate fidelity.
Right, 99.5% fidelity. Is that good?
It's very good. More importantly, it represents a 2-fold reduction in the error rate compared to their previous system, the Anka 3.
A 2-fold reduction. That sounds like a big leap.
It is, and they achieved that improvement in just 6 months. That kind of rapid progress in reducing errors is absolutely crucial for making quantum computers useful.
Where will people be able to access this new machine?
It's going live on Rigetti's own quantum cloud services platform, and they said it's coming soon to Microsoft Azure as well.
Okay, let's unpack this chiplet thing a bit more. You said 4 chiplets. Why is this modular chiplet-based architecture so important to Rigetti's strategy?
They see it as a huge differentiator. Kulkarni, the CEO, was very clear on this during the call.
What are the advantages?
Moving away from trying to build one giant monolithic quantum chip to using smaller interconnected chiplets gives them, they believe, much better control over manufacturing uniformity. It reduces complexity, and crucially, it improves the yield, how many working chips they get from each production run.
Makes sense. Fewer eggs in one basket, almost.
Kind of. And Kulkarni went so far as to say it's truly the only scalable way to get to more than 1,000 qubits. That's the path they see towards fault-tolerant quantum computing.
You can kind of see parallels in the regular computer chip industry moving to chiplets.
Exactly. It's a strategy that worked really well for scaling classical processors.
And so they're sticking with superconducting qubits as their core technology.
Yes. They position that choice as a key advantage, too.
Why? What's the benefit there compared to other approaches like ion traps?
Speed. They argue superconducting qubits offer gate speeds that are more than 1,000 times faster than competitors like ion traps or neutral atoms.
1,000 times faster.
That's the claim. They're aiming for gate speeds under 50 nanoseconds. They see that speed as vital if quantum computers are ever going to integrate smoothly into existing data centers alongside traditional CPUs and GPUs.
Okay, so major progress with Cepheus, chiplets looking promising, speed advantage. What does this mean for their roadmap for the rest of this year, 2025?
They reiterated a pretty ambitious goal. They plan to release a system with over 100 qubits, built using chiplets, and maintaining that high 99.5% median two-qubit gate fidelity, all by the end of this year.
100 plus qubits and 99.5% fidelity by year end. That's aggressive.
It shows confidence, doesn't it? Confidence in their chiplet approach and their ability to keep improving fidelity while scaling up.
All right, let's shift focus a bit now. Looking further out, beyond 2025. What's the long-term vision, particularly around this idea of quantum advantage? How does Rigetti define that, and how close are they?
Right, quantum advantage. That's the holy grail, really. Rigetti has a specific definition.
Which is?
For them, it means hitting several targets simultaneously, at least 1,000 qubits.
Okay.
Achieving 99.9% two-qubit gate fidelity.
Higher fidelity than now.
Yep. Maintaining those fast gate speeds under 50 nanoseconds.
Got it.
And implementing quantum error correction. All of those together.
That sounds like a tall order. How far away do they think they are?
Kulkarni estimated it's still about 3-4 years away. He actually said 4 years is probably the fastest anyone in the field could realistically achieve it.
So, still a ways off. What are the main hurdles?
Well, he sounded confident about continuing to improve gate speeds, but he did mention challenges like, interestingly, the sheer density of wiring needed inside the dilution refrigerators, those ultra-cold systems that house the qubits.
The plumbing problem.
Kind of, yeah.
Right.
Cramming more and more control lines into that tiny, extremely cold space is a real engineering challenge. And then, of course, the massive complexity of effective quantum error correction.
Speaking of error correction,
Yeah.
that's essential for making quantum computers truly reliable, right? Where are they on that journey?
It's definitely a major long-term focus. They're making progress, working with partners like Riverlane on some real-time error correction techniques.
Yeah.
But implementing the really sophisticated error-correcting codes, like the QLDPC codes, that stands for Quantum Low-Density Parity Check, which came out of a DARPA program they were involved in, that's still a year or two away, according to Kulkarni.
So still in development.
Yeah. And he pointed out that truly demonstrating the benefit of error correction will probably require systems with several hundred qubits operating at even higher fidelities, like 99.7% or 99.8%.
I see. It's interesting. He focused on physical qubits and fidelity. Why not talk about logical qubits, which you hear some other companies mention?
Good question. Kulkarni actually addressed that. He basically said the definition of a logical qubit, which is like a robust qubit made from many physical qubits using error correction, is still really complex and even controversial. Yeah, it makes it hard to compare progress fairly across different companies and different approaches if everyone defines it differently. So they prefer to stick to measurable physical parameters like qubit count and fidelity.
Fair enough. What about partnerships? We heard about their tech, but who are they working with? You mentioned Quanta earlier.
Right. Quanta is a key one. They're focused on the hardware around the quantum processor itself, the control systems, the readout electronics, basically the non-QPU stack.
And the goal there?
The idea is for Quanta to integrate their control systems with Rigetti's QPUs over the next few quarters. This should let Rigetti focus even more intensely on just designing and building better QPUs, while Quanta handles the supporting hardware.
Sounds like a smart division of labor.
They see it as vital for eventually getting to high-volume, lower-cost manufacturing down the line.
Okay. And government funding. That seems to be where most of their current revenue comes from. Any updates or challenges there?
Yeah, that's a big piece of the puzzle. Development contracts, mostly government ones, were over 90% of their revenue in the first half of this year.
Wow, almost all of it.
Pretty much. And their revenue has been hit recently because the big U.S. funding program, the National Quantum Initiative, or NQI, actually expired and is waiting to be reauthorized by Congress.
Is that likely to happen?
They seem very confident. Kulkarni said there's strong bipartisan support for the reauthorization bill. He called it a question of when, not if.
And what would that reauthorization mean financially?
The bill potentially allocates around $2.5 billion over 5 years, so maybe $500 million a year flowing into the U.S. quantum ecosystem. Rigetti obviously hopes to capture a slice of that.
But outside the U.S.
They're also targeting opportunities in other friendly countries, Western nations, some Asian countries that are looking to build their own on-premises quantum systems. They think that could be worth hundreds of millions of dollars a year collectively.
Okay. One last big question, especially given that huge cash pile. M&A, mergers and acquisitions. Are they looking to buy anyone?
Kulkarni sort of downplayed that, for now at least.
Why?
He essentially argued that Rigetti is already in a leadership position technologically. He acknowledged a couple of the huge tech giants might be ahead on certain specific metrics, but obviously those aren't companies Rigetti could acquire. They're out of their league, as he put it.
Right.
So while they'll always keep an eye out for smaller acquisitions that could maybe accelerate their roadmap a bit, he doesn't currently see any obvious practical M&A targets that would dramatically change their timeline or capabilities.
Interesting. So focus is mainly internal development and partnerships for now.
Seems to be the case, yeah. Use the cash to execute their own plan.
Okay, this has been a really insightful deep dive. Wrapping things up, Rigetti's Q2 2025 paints a picture of a company. Well, making some tough choices, wouldn't you say?
Definitely. They're clearly prioritizing the long-term strategic goals over looking good on the quarterly earnings sheet.
They took the dilution hit, accepted the short-term financial pain, all to secure that massive balance sheet and keep funding the R&D.
Right. Build the war chest, push the technology forward.
And we did see real progress on the tech side. The new Cepheus system, that big jump in fidelity, the clear roadmap towards 100 qubits.
Yeah, the chiplet strategy seems to be paying off in terms of error reduction, at least so far.
So, despite the headline miss on revenue and earnings,
you could argue this quarter was actually a successful execution of their long-term strategy. They got the capital they needed, and they demonstrated tangible technological progress. Bought time, showed results.
So, for you listening, here's maybe a final thought to chew on. For a company like Rigetti, playing in this incredibly deep tech, long horizon game like quantum computing, does a traditional earnings miss even mean the same thing?
That's a great question.
Or, put another way, in this race for quantum supremacy, could a successful quarter actually be one where they deliberately make sacrifices on the income statement, like taking on dilution to secure the time and the breakthroughs needed to potentially win in the future?
It definitely challenges the standard way of thinking about quarterly results, doesn't it?
How might that shift your own perspective on what success really looks like for these kinds of emerging, capital-hungry tech companies?
Something to think about.
Indeed.
That's all the time we have for this deep dive. Until next time, keep digging, keep learning.
And keep asking those big questions.